a lot of people have been talking about for some years now about the end game, about the national debt, the interest on the national debt. The government's going to default, or it's going to print money into oblivion, and when's this going to come about? And you keep hearing these things about 2015, 2020. I think it's going to come about a lot sooner than you think. And I know I'm watching the metal prices going down. It doesn't seem to quite make sense, but I'm having a very good suspicion that this is just the deflation that precedes seriously high inflation. Just looking at who holds the debt, who are the holders of the U.S. government issued debt as of September 30th, 2011. In these figures, they're talking $14.8 trillion. And if you look at the current figures, it's almost $15.2 trillion. And that's in a matter of less than 3 months. So, it's quite a bit been added on just in that short period of time. But, most of the debt is actually owed to U.S. institutions and individuals. Then it's next to Social Security. But this chart breaks out what was bought up by the U.S. Federal Reserve in the quantitative easing. $1.7 trillion, which is even more than what China holds. Now, personally, what I think they're going to do is when they default on a debt, they're going to screw over everybody that's a foreign holder of debt. And I think this game is being played by the Western elite that are located in the U.S. I don't know what they're going to do as far as what they're going to do to the banking system over here locally. I don't know. I think they're going to screw over the middle class, and that's why I have to say, most people aren't waking up, but a few are. I think people on YouTube are waking up. I've woken up. But your only protection is physical gold and silver. And it's been said a million times, and I know you're seeing the prices going down, but I just want to harp on this a little bit more because it does bear repeating. And I don't think it's something way off in the future someplace like 2015, 2020. I think it's going to be, the inflation's going to hit this year, and the default might be as soon as 2013. So if you're in the right spot, you should be okay. This is a simple note I picked up someplace, but it's very revealing as to, the end game is already here. In the fiscal year 2011, in other words, from September 30th, 2010 to September 30th, 2011, the U.S. Federal Reserve increased its purchase of U.S. government-issued debt from $966 billion to $1.77 trillion, which is an 83.5% year-to-year increase. So, they were purchasing debt, but they increased their purchases by almost double. Forget about the 83.5%. Pretty close to double. And that tells you the end game is it's here. It's already here. Looking at revenues, what's supplying the government with the money it needs to run, most of it's coming from borrowing, okay? It's a simple fact. And that's telling you, they're borrowing it from themselves. If they're the Treasury's issuing bonds and the Federal Reserve is buying them. It's a joke. They're just printing money. So, hard assets have to be your safety, despite what you're seeing. And this deflation is, I think it's a real curveball coming at people right now, because I think it's very temporary deflation. And you're going to start seeing some things change. I was looking at these figures, and I took them right off the government site, and I put them in. I'll post the links on them. You can look at that. And I think some of these percent numbers here, I was just looking at, how much higher the interest payments were from, like, say, 1996 to 2011. But you got to remember the interest rates. They were paying a lot more interest to the holders of the government bonds and debt back in 1999 than they are in 2011. Yet, it's almost 1/3 higher interest payments going out. That's very significant. When you're looking back here in 1999, you had $354 billion interest payments going out. And here in 2011, it's $454 billion of interest going out. So it's 1/3 higher. But what's different about this really is the interest rate that was being paid. Well, the interest rates, they varied a little bit month by month or daily, but it was around 4.6% on a 2-year note. Today, it's 0.3%. So, how could they raise interest rates? Say they're going to raise this from 0.3% to 3% on a 2-year note. That would make this 10 times higher. That's not going to happen. And if you look at, here's the president's budget. And I just got this right off the official site, but you can see I'm pointing to this net interest percentage of the budget. It's 6.3%. So it always runs the net interest on a budget, usually like 6 or 7%. You think they're going to be able to raise interest rates to say 3% on a 2-year note from 0.3% and pay 10 times more? That would take up more than half the budget right there if they're going to pay some decent interest. So it's telling you the end game is already here. I just want to point out this other article. It was from August 20th, 2010. And they're talking about interest on a national debt may consume half your income taxes by 2020. Well, if they raise the interest rates a little bit, it would already do that flat out. And they're also talking about the cost of the national debt. And they're talking about years of 2020, but they're talking about the national debt held by the public is set to surpass 100% of the gross domestic product by 2020. This was being talked about in 2010. Well, what happened in September 2011? It hit 100%. It hit 100%. So here it was 13 months later. They're talking about a forecast for 2020. It's already here. And, they can't raise interest rates because that'll totally sink the budget. And as it is, where are they getting the money from? Borrowing for the budget. So, hang it up. I mean, the end game is already here. So, when I'm looking at some of these prices on silver and gold going down, people should be buying. They're scared to buy because they're wondering, where's this falling knife going to land at? It's almost like some of the other things people get afraid to buy, but they're doing the wrong thing. I think maybe some people are buying, but I personally, I've been thinking about this. I think I'm going to stick some more money in the physical because I'm not trusting this stuff at all either. And I think the end game is a lot closer than people think. Now, if you add in a couple other factors, if you're talking about where money goes to as far as what's being paid on the budget itself, a lot of it goes to the military. So if you add a little more expense for some type of war or conflict in Iran, what's going to happen there? There's going to be a lot more borrowing, bigger slice of this pie. And since China's not buying our debt anymore, can you figure what's the next thing that's going to happen? There's going to be more of the U.S. government issued debt being bought by the Federal Reserve. So, and then when you're looking at this chart, this green area, which represents the purchases of the U.S. Federal Reserve of debt, is going to be a much larger portion of the pie of holders of U.S. issued debt. So the end game is already here. Now, as far as I know it's almost like people are thinking like deflation.